Hey, so if you buy your house in the last 2 years, maybe 3, there's a scenario that's coming up for us, and it's happened a couple times. It's a little bit of a unicorn, but it's typically zero down, people who bought zero down that are gonna sell their home again. And for a large extent, it's people who bought zero down with VA. And with the VA, unless you qualify for a disability, the VA charges a fee on top of your loan. So now you got this scenario where you just bought the house in the last 2 years and you bought it for zero down, no skin in the game, and you've added extra on top. And what we're finding is there are a small percentage of people who are upside down on their property. Now the VA or the military comes and says, you need to move back out of the area. They come to us, they want to sell the property, and the numbers don't look so good. So we're going to unpack that for the next few minutes and tell you all about it.
So I never want to talk about the worst case scenario because I always think real estate is such a great investment. So for me, it's hard to go down this rabbit hole because it is so rare, especially in our market here. We don't have a lot of swingy ups and downs. We're typically a pretty steady investment here where you can assume most years are going to make 5, 6, 7, sometimes even more every year.
%.
Yes. So when we talk to homeowners or future homeowners, we're talking about, in a couple years, 3 years, you could sell your home and be, pretty well off and not worry about losing money. So there are a couple of rare scenarios, rare years where you could get caught in an upswing that then turns down. So we're going to talk about that a little bit.
Yeah, what we're really talking about is the interest rate really drove up. And so it got a lot of people stuck, either making higher monthly payments or, due to those higher monthly payments, the market kind of stalls a little bit. So instead of it going up, it's normal 5, 6, 7. We've had years where it's 10 or 20%. Those were the rare kind of post-COVID years, but a solid 5% is good. But we just ran the numbers in Thurston County. And again, every house is different. Every situation is different. You could have bought the house on a great deal and you're already in a good equity position. But let's assume in a scenario where you bought the house and you actually had to pay a little extra for it. So you went a little above what it was worth at the time. And then we're looking at the numbers here. And so we've got the last couple of years to report back, Thurston County residential only. And so we've got basically a 2.1% gain year 1, and then year 2, only 0.5%. So those two numbers equal about 2.6, right?
Yeah, so you're under 3% in 2 years.
Mm-hmm.
And when you go to sell your home, you have to pay excise tax and commissions.
Mm-hmm.
So you're looking at probably around 9% to sell. So if you've only gained around 3, you're going to be 6% underwater at that point.
Yeah.
So those are the numbers we're talking about. Like you have to gain at least 9% in order to sell your home and break even. If you didn't gain 9% in the last 2 years, you're going to come to the table with some money.
Yeah. And the unfortunate thing is if you do not get a decent deal on the home and you do say, you know what, I really want this house. I want to have my realtor go negotiate for me. And they're negotiating against 7 other people, right? So it ends up being that you're paying for over the actual value of the home, which was a lot of people in the last couple of years. If that's the case and you have to turn around in 2 years and sell the property, you kind of already are, you paid extra for the home, so you're in a negative equity position from the beginning. And a lot of people don't even realize that they're getting stuck in this type of situation.
So I just want to say it again. Most people are not going to end up in this situation. Real estate is a very safe investment for the most part. It is a rare occasion that this kind of thing can happen. And in my mind, it has to be almost like, I'm gonna say shitstorm. Like you have to have 2 or 3 things stacked against you for this to happen to you.
Well,
you have to have a time crunch, like you have to sell right now. Because what I would say to people, if they're tight on this, just wait a year. Wait 2 years. If you can rent your home out for 2 years, you're gonna gain that equity back, most likely. If you've already had a downturn in this market, you're most likely not going to continue to have a downturn. You're going to have another couple years where it swings back up. So you would have had to buy at the very top, You would have had to have a little downswing. You would have had to overpay in that moment.
Yeah. Overpay. Yeah, it's huge.
And then you would have to have a squishy, like a squeeze of a time frame right now. So you would have to have like 3 cards against you at the same time.
Well, and it's what I've found, because I'm running market analysis every day for like multiple properties. And literally the people who fit into this bucket, this small bucket that we're talking about, are people who bought with 0 down. Mm-hmm. They had to negotiate and they overpaid for the property, or they rolled in their closing costs and stuff. And then the VA charged them the funding fee if they didn't qualify for any disability. Mm-hmm. So it sounds like this may be everybody, but it's not. It's this rare kind of person who probably bought 0 down, over negotiated, and rolled in extra costs, closing costs, funding fee, that sort of thing. Everybody else is at probably a break-even point, or they're making money.
Yeah, this is another reason why you definitely want to work with a professional and have sort of like a worst-case scenario mapped out in your mind, and also like what is the realistic time frame for you to stay in the home, especially if you know you're starting to get into like multiple offer situation where you know you're going to overpay a little bit for right in this moment. You're basically buying out your equity from next year when you do that. Yeah. You're like, okay, we're anticipating the market's probably going to go 5% next year, so we're willing to overpay by 3% on this house because we're still going to make 2 next year if it goes up the typical 5. And then something happens where the market doesn't go up that 5, and you're like, oops, okay, now we have to stay another year to make that back up. So you just kind of have to know, like, can we stay in this home for 5 years instead of 3? Is that possible if things go sideways? But there's things you can't control in life. And that's the other thing. If you have a scenario where, you know, you did overpay a little bit, you did go 0 down, you do have your funding fee, and now the military is moving you unexpectedly. This happens sometimes. So then it's like, okay, what are my options here? And then we come in and help you figure it out. And we give you your options. This
is a unicorn scenario we're talking about. Like, let's just talk about everybody else. Everybody else is putting 3% down, 5% down, 10% down, or 20% down. So worst case scenario, they're absorbing some of that initial down payment.
They might not get their down payment money back in that worst case scenario, but they're not coming to the table having to write a check out for $8,000 or whatever the difference is. So those people feel it in a different way, like emotionally, but they're not like draining their bank account to get out of the property.
Well, yeah, not everybody is meant to be a landlord, even if you're using a property manager. It like really stresses some people out, but I can tell you owning an investment is a fantastic thing. Anybody that can actually keep the property and let the renter kind of help you bring the mortgage balance down, because it's not something we talked about in this video, but every year that goes by, you're paying that principal down and you're closing that gap really quickly. The interest rate's a little bit higher, so that gap isn't closing as fast as we'd like to see it happen, but sometimes it just takes that, a 1-year lease. You know, we turn around at that point, then we sell the property, and then you're out without owing money, and the renter was in the interim paying, you know, what your mortgage would be. So you just want to know those numbers. Like, if you're in this situation, the first step is, how much could this property potentially lease for, and what's my mortgage payment? What's it going to cost monthly?
Yeah, right now a 2,400 square foot home in DuPont is renting for $3,500 a month.
Yeah.
So that's a pretty good rent rate. So unless your house payment is $4,000, you know, you're still going to be in a decent position financially to keep it for another year.
And sometimes that's the best option, because the other option would be a short sale, which can affect a lot of things for you trying to purchase in the future. Having a short sale on your record, just any of those implications. So, and then also it has to be approved for the bank to just say, you know what, I'm going to pick up your bill on what you owe on the property. I'm going to let you sell it, even though there's going to be money owed at the closing.
Yeah, so who this affects the most, obviously we said the word VA, so I hope people understand those are veterans, people that qualify for a VA loan. And then also FHA, you do have to put 3.5% down, but a lot of folks do a down payment assistance program, so it ends up being 0 down for them. And then that other 3.5% that comes from the program itself gets paid off at closing. So you have to have enough equity in the home to be able to pay all of that off at closing. USDA loan is a different type of loan that you can go 0 down. There's not a ton of area in Thurston County that you can do USDA, but there are some. So those are probably the ones that are the most affected. Once you get up over 5% down, you usually don't see this as an issue as much.
Yeah, and for every seller that's in this situation that did that loan program, this could affect you if you need to sell your house and you just bought it in the last 2 years. But more importantly, if you're buying and you want to have that, like smart purchase happening, you want to be aware that I don't want you to fall in this type of situation. So if you are USDA, VA, FHA down payment assistance, you want to be very careful about the house you purchase and how much you purchase it for. And again, I think this is a unique window in time where we had a little abnormally low appreciation due to high interest rates, and it'll probably correct itself because this is just a small window compared to like, if we go back all the years, right? Normally it's totally fine, but on this channel, we have a duty to be super transparent and not blow sunshine up your butt that like everybody should buy and everybody should sell.
And everybody makes $1 million off a house.
Yeah.
I mean, I would say in 25 years, we've been doing this a long time, I've only seen a couple of times where people got caught in this little surge of it's basically too much momentum going one direction. Everything was going up, 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 up. And then those people at the very tippy top when the rates started to shift and go up, and then we had no inventory. It was all just a combination of things. And then all of a sudden things shifted around. So that little group got stuck in there and didn't get their typical 5%. And now those people, if they have to sell right now, they're going to get a little squished. And they're going to have to make some hard financial decisions.
And a lot of people are jaded from 2007, 8, 9, 10. Right? So that time frame when we did have an economic sort of housing collapse occur, pretty much the only one. They got stuck too. And so if you're talking to somebody who was involved in that and had to short sell their property or something, they're going to have a lot of opinions and they're very scared about any market because they got really burned during that time frame.
And I think people like to talk about the worst case scenario or the worst thing that could ever happen to you, or the scariest thing, or man, this happened to me, don't let it happen to you. So you may hear something that's like so negative because somebody went through something. The chances of that happening are very rare. And if you work with a professional that knows what they're doing, you're probably not going to get caught in that. And if you do, it's really just like a combination of uncontrollable events. And sometimes life happens.
Well, and let's be real, right? Somebody's moving to the area right now. They tell me that they're zero down VA. We have very limited inventory. They're at a price point, let's call it under the average price point, like $450, they got to buy a house. If the market was just on some sort of trajectory, because like the inventory is low, right? And they have to compete with that property, it might just be a better time for them to rent a house because if you not are going to be here and you know for a fact that you're going to be here for like 3, 4, 5, 6, 7, 8 years, sometimes it's better just to rent.
So I can say that this actual scenario happened to me. I bought a house in 2006. It was new construction. The market had gone up and up and up and up and up before that. And then if you remember how 2008 went, it was really fun. Everything crashed. And I could have jumped out at that point and did a short sale or like just foreclosed on that property. Like I had every reason to do that because not only was my house tied up in that drop, also my income was too. So, but at the time, I just thought I'm just going to hang on to it and just negotiated with the bank and figured it out. But now that house is worth like $560,000. And I'm so glad that I just clung onto it. I paid like $260 for it. So what I did was put a renter in it.
Yeah, real estate's a long game.
Yeah. And now I'm like, okay, I got like $200,000 in equity. So I'm really glad I didn't do that.
A lot of people
Number
here,
one,
if they're VA and they don't want to be a landlord, real estate's a long game, great, you told me that, but I don't want to be a landlord. We have great property managers, by the way. Everybody should try to have an investment property if they can fathom the idea of it, because it is really how you build some wealth, right?
Well, and with VA, you can own more than one property and still do your VA loan. Just a lot of people don't know that fact. It is true, you can. You have to be able to obviously qualify for it, and you got to talk to your lender and make sure that works for you. But I guess, yeah, my advice would always be try to hold on to it if it's at all possible.
So if you find yourself in this situation, you've bought a house in the last 2 years, maybe you think you overpaid a little bit, maybe you rolled in some closing costs, maybe you had VA and a funding fee, and you think you're kind of stuck because you want to move out of the area or you have to relocate, definitely get in touch with us. We can help you unpack the situation. It's got to be looked at by a pro. I will say that for sure. And sometimes the best option is actually to be open-minded to renting the property. And then if that's not in the cards at all, then yeah, you've got the short sale option potentially. So understand your options is what I'm saying. And if you're a buyer and you're watching this and you're like, we've totally freaked you out, now you don't want to buy a home, just know that this is kind of a unicorn scenario we're talking about. This is that person who really kind of, unfortunately, really wanted the house bad. And so they had to negotiate for that house and slightly overpaid for what it was worth on paper and its value. And so they got a little bit stuck, needing to move right back out of the area. Most people own a home for 5, 7, 8, 9, 10 years. And then these little bumps that we've seen in the last 2 years don't affect them at all. And they go on and they make good money on the property and build their wealth.
We're not just realtors. We both actually are property owners and managers. So we have renters. We've gone through most of these scenarios ourselves, the ups, the downs, the buying, the selling, the winning, the losing. We've been through it all. So definitely check us out. And if there's any more information you need, check out our channel and we'd be happy to help you.